Joining me now is Potomac Wealth Advisors founder and president, Mark Avallone. Mark, good to see you. Thank you so much for being here. A big rally once again. This melt-up continues with record highs. Do you think this has legs well into the fourth quarter?
Well, good morning. And it does have legs. Valuations are lofty for sure, and it does cause concern. But you can't bet against this momentum without running the risk of being on the wrong side of a life-changing, generational-changing technology boom, AI build-out. And then the residual effects of that are real. So it's not just the Mag 7 or the big chip makers. It's going to have a trickle effect to the companies that can effectively use AI to gain productivity, improve their earnings, and that's going to be the broadening out effect that we see. So we like technology and beyond. We're still dancing, but we're by the door, as they say.
What do you mean by that? You want to sell into a big rally?
Well, we're going to look towards year end. We think there's going to be a continued melt up. You used that word earlier. We think going into year end, it's going to be too risky for money managers to take money off the table. Greed eventually replaces fear, and it's running rampant right now. And we heard some market comments yesterday that were saying, hey, we're concerned about these valuations, but to bet against this technology boom, the momentum, what's happening now, we see it with how gold is behaving and how Bitcoin is behaving. It's a risk-on game, and leaving too early right now is the bigger risk. But I think if people are getting a little out over their skis, what I was alluding to is that's what you want to be careful about. And I think towards year-end we'll reassess and see what 2026 holds.
Let's talk about earnings. The major banks will be reporting their quarterly numbers next week, and then it's off to the races with corporate earnings. What are you expecting from the macro story when it comes to earnings?
We're very bullish on financials, and we think yesterday's merger with Fifth Third and Comerica is going to be a near watershed event for the mid-sized banks and regionals. You and I have already talked about how well positioned the mega cap banks are with their capital markets, their wealth management, lending arms, and they've gained so much efficiencies, and they are already using AI. They're clicking on all cylinders. When we see that dropping down to the mid-tier banks, it's going to be a very profitable opportunity for these banks to merge. Now, we saw a little premium yesterday. We didn't see the acquirer take too much of a hit. We like the way that shook out. We think that's going to help lower their antiquated deposit gathering machines, the antiquated banking deposit gathering that they have, and we think they're going to combine a lot of back office operations. Other banks are going to see that. They have to compete against private lenders. They have to compete against mega cap banks. So we really like where the regionals are situated here, and we think bank and financial earnings across the board will be strong.
I mean, the large banks obviously are up against the cap rule on deposits. They're not going to be able to merge in terms of commercial banking. Maybe they'll acquire asset managers, but they're not going to be able to. But you're expecting consolidation among regionals, smaller banks.
That is correct. Mergers like we saw yesterday are going to be in vogue, and we think it's long overdue. We're overbanked. Again, the cost structure is too high. They have to compete against online deposit gathering machines and private credit. So the current model's not as sustainable, and some of their stock prices would have reflected that the past decade. So we're very optimistic about what yesterday's deal portends to, and we think it's going to gain regulatory approval and have a friendlier say-so from this current administration on bank mergers.
Mark, final word.
I think the impact of the big, beautiful bill, the tax benefits, the stability for corporate America, a Fed that is leaning to be accommodative.
Right.
They'd like to be more. The strong GDP numbers, the economy is clicking. Productivity, technology advances, helping efficiencies, corporate earnings. I think the momentum stays until year end.
All right, we will leave it there. Mark, great to talk with you. Thanks so much, Mark Avallone.